Good afternoon, everyone. Today is Friday, the 30th of November, 2012, and the market finished here with a slight gain today. The S&P 500 did, at least. And let's take a look at the weekly numbers and the monthly as well. For the week, the S&P was up 0.5%, Russell 2000 up 2%. Financials did lose a little bit of ground as they encountered that 50-day moving average. We'll see in a moment some of the other markets did run into that 50-day moving average as well. And gold came off 2%. For the month, gold was down, and we had the financials down as well, while the semiconductors gained 3%. So let's take a look in here where we are and what we have the potential for. It's good to see that on Wednesday we saw that pullback in the S&P 500. It came down to the 10-day moving average, and we created an important higher low there. However, we did get up to this declining 50-day moving average and just short of a prior important area of support which became resistance, and that's this little band in here from about 143 to 143 and a half. So it's possible we'll continue higher here. This 50-day moving average declining doesn't mean it will that the market will come back down, but it is an important technical indicator, and the direction of the moving average is typically more important than where we are in relation to it. But when we have it right at that declining 50-day moving average, we have to pay particular attention. However, we don't want to get short until the market tells us, and right now the market isn't telling us it's time to get short. We had this pattern of higher highs and higher lows above the rising 5-day moving average. We, of course, had that shakeout Wednesday morning, but we did see that resistance from earlier in the week became support here later in the week. So when we get down to the 10-minute time frame, we can see that resistance here at about 141 and a quarter did become support on Thursday, and we have that rising 5-day moving average. So from the intermediate term standpoint, we're innocent till proven guilty. From the daily time frame, guilty till proven innocent. So this is where it gets confusing, and where we have to say the market is sending us a clear message, and that message is indecision. The indecision comes about because of this volatility in the market, and is it a result of the the fiscal cliff, or is it something else here at hand? The fact is, the reasons don't matter so much as what's actually happening and what the market is telling us, and how we interpret that. So I think that next week, if we break back below that 141 and a quarter, and then in particular if we stay stuck below the 5-day moving average, then it would be then it would be time, it would appear, to see a little bit more substantive correction, perhaps down towards that 140 level, even 139 and a half-ish. So it's really kind of, again, at a tricky area for the S&P 500. It's no clearer in the Nasdaq, as we have this market coming up to not only that declining 50-day moving average, but this prior level of resistance right up here at about $66.20 or so. What we want to look at, and we'll just take a look here real quick, is what the number of that is. It's the 50-day moving average is currently at $66.28. But what I was going to go back to was say, we've had this big run. Where have we come from? We've come from 61 basically up to 66 about. So we've rallied 5 points, or about 8.5%. And where do we have the potential to go before we're likely to encounter resistance? Well, we had resistance here before. We have that declining 50-day moving average. It seems as though this area ought to provide some resistance, but again, it's not so far, except when we look at maybe a 10-minute time frame, we can see that we've had 2 days of basically pretty much sideways action. But I think that breaking below the 65 and a quarter, 65.30 level, that's what would get us to be a little bit more cautious and say perhaps we do need to pull back, and a pullback in here would be a good thing. In fact, you could even look at this and say, here's a left shoulder, here's a head, and perhaps we're going to form a right shoulder if we get down towards that 10 to 20-day moving average, down at about 64 and a half, $65 a share. So it's not giving us a reason to sell yet, but it is giving, or to sell short, but it is giving us reason to say, okay, we're in this potential area of resistance. Let's see how the market handles it. It is also a 50% retracement of the the highs from September to the recent lows is where we are. For the S&P 500, as far as the retracement goes, we've come nearly 61.8% retrace, that is. So in that 61.8% retracement, you can see is right up here at that 143 level. So that adds a little bit of significance to that level potentially as well. The Russell 2000 we have at an important level as well. Let's just throw the Fibonacci's on there while we're at it. We're coming close to the 2/3 retracement level, and we have, of course, this declining 50-day moving average with this prior level of resistance, and that level of resistance is about $83. So we have this prior resistance. We've had an uninterrupted run from basically 76 to 82, and it looks like it's beginning to slow down here a little bit, just for one day's perspective. But I think back below 81 and a quarter is where we take the more cautious approach. Of course, we want to be cautious here now, but I think that below 81 and a quarter, that's also this trend line. That's perhaps where a few days of pullback would make sense to come from. December is typically one of the most bullish months there is, but we have so if we started out the month with a little weakness, even down towards 80 and a half, I think would be a really good thing for this market. If we were to pull back and create a right shoulder in here, then we run the chance that we have an inverted head and shoulders pattern. Realtick, by the way, realtick.com is the sponsor of this Friday video that I place on YouTube each week. So if you're trading and you're looking for really a professional trading platform with all the bells and whistles, that's Realtick, and check them out at realtick.com. Back to the markets, though, the semiconductors, again, they were up 3% on the month as they're beginning to really just kind of turn more neutral on this daily time frame. We've got this bigger range here of 30 and a half to about 32 and a half, and you can see that this prior support in here, which has become resistance twice, is now looking like maybe it's going to be a little bit of a barrier here as well for the near term. But we're not backing off of it yet. We have a pattern of higher highs and higher lows. We have a rising 5-day moving average. So from the intermediate term, we say it's innocent until proven guilty. However, it is extended and getting into a period where a place rather, an area of potential resistance. So we want to keep our alert high. That's the clear message of the market. The uncertainty is the clear message. It means since we're at these key levels, and for instance, the financials, we're at that 50-day moving average. The 50-day moving average has held this market hostage so far. We're at this prior level of support as well. Well, because we're at this important level, we have to say, let's wait for evidence to say who's really going to take control. A close next week above 1585 kind of sets the financials back in motion towards probably new highs for the year here, and they are holding up okay. We had a little shakeout on Wednesday. Now this 1585 level, this is where the clear resistance has formed, and until we can really get above and hold above there, because that's also, again, the 50-day moving average. Until we do that, we have to continue to look at this market really kind of suspiciously. We can see that we're also at that 61.8% retracement level approximately. So the financials are giving us reason also to be cautious in here, and you have to look at it, though, and say we are being cautious, but the market certainly is holding up a lot better, I think, than most people have been expecting, especially with the what's going on in Washington. The gold this week, we were talking about the potential, and it's still there, for an inverted head and shoulders on this weekly time frame. The real level for it to break, of course, is up here at the neckline at 174. Well, we're way down at 166, so that's pretty far away, and we don't want to wait for that to purchase gold if you're interested in it. But gold, you can see, has been holding above all the key moving averages. Here we have the 100, the 150, and the 200-day moving average. But the 50-day, it's sloping lower. We got slightly above it for a couple days. I think it trapped a lot of people in there. What we were calling for on Alpha Trends was a pullback and to kind of consolidate as the 10 and 20-day moving average kind of catch up. Now, the moving average isn't our signal to buy or sell, but it is saying that, when when gold started pulling back from that high that we didn't want to purchase it until it began, and this is the scenario we were looking for maybe to occur, which was to consolidate and find some support along that 5-day moving average, and then to purchase it had it moved higher with a stop underneath this level. That didn't happen, of course, so there's no reason to be losing money in it. There is some important support just below at about 165.40 in gold, and if it breaks that, perhaps we're going to get a little bit bigger washout down towards that 200-day moving average. So really, gold is more neutral than anything right now, but it's setting up potentially for some strength. And beyond that neckline, I think that if it takes out here in the next week or two the 170 level, that it's good for a trade at least up to the neckline, and then we'll see what happens from there. Apple, everyone likes to talk about Apple, so let's take a look. As we know, 10 days ago, that Friday, it shook out, below this low in here. And you could even make a case for Apple that bearishly that it's making a head and shoulders topping formation. So that's something to be aware of. Apple basically, did that before on the daily time frame. That is, it put in this head and shoulders pattern, far exceeded any downside target that people were looking for based off of that. And targets are there just to give us an idea of what we want to look for. And here we can see that Apple has retraced a little more than 38%. It's into an area where there was some importance before. That is this this band over here of what was resistance. We're kind of at that level if I drew the line straight. And below a declining 50-day moving average. The 5-day moving average, when we look at the intraday time frame, we can see we do still have a pattern here of higher highs and higher lows, but it seems to be slowing down, and we're right along that 5-day moving average, which is beginning to flatten out. So if you bought Apple, I think that a good place for a stop, if you own it at a good price, is probably below this level here at about 573. That was a little resistance here that held as support at that 5-day moving average. And I think it could bounce around in here, and breaking the 5-day moving average doesn't mean it's going to completely fall apart again. But I think that if it broke below this level, then it would be a good reason to say, okay, maybe this bounce is going to go back down and probably not test the lows, but come back down towards 550 wouldn't be much of a surprise. And then you have the potential that it is forming this head and shoulders top on the weekly time frame. You look at the monthly; it's obviously had a giant run, and there's a lot of fundamental arguments you can make in either direction, but you have to listen to the message of the market, and most importantly, understand what time frame it is that you're looking to engage the market on. I get questions all the time. What do I think about Apple? Well, what do I think about it for a day trade? Is a lot different from what I might think here on the 1-minute time frame, of what I might think of it for a swing trade or for an investment. So you have to understand your time frame and know where to manage risk. Make sure you don't get stuck in a belief about a stock just because you know something about their company or think you do. Anyways, thanks for listening. Hope everyone has a good weekend, and I'll talk to you next week.